We are live with the macro market views with JT, Mr. Schick. How you guys doing, man? Crazy couple weeks in the market since we missed last week, huh?
Mm-hmm.
Yeah, man. I'm back under the weather again, so you know how that goes. Just like the market actually, you go up, down, up, but now I'm gonna stay up. God damn it. Okay. But yeah, good. Lots of data came out between the last time we spoke and this time, so should be a good one today.
Sweet, sweet. Isaac, how you doing, man? How you feeling? How you looking?
I'm doing good. Yeah, I got published in the National Review on AI. I wrote a paper on AI, so I was pretty
Nice.
stoked about that.
Man,
That's
send that link.
congrats, buddy.
Is that the link to that? Is it an essay article?
It's an article. Yeah, it's nothing too fancy, but it's on. It's essentially about like AI fear mongering. Would be a good way of putting it. Like, how real is the hype about AI's potential negative effects, and also what even is AI? So I kind of examine those two ponderies.
We'll put the link to that.
Elon Musk been pushing the dangers for years, man. He's so funny. And
Oh yeah,
he'll get on a podcast, maybe like, so what are the dangers of AI? And he'll answer like this. I mean, what do you think it is? I mean, just think anything is possible. And it's like, damn, man, that shit sounds terrible. He just leaves you to your mind because he doesn't actually answer the question. Yeah. Funny.
Well, and he's a very, respected guy who's the richest guy in the world. So people just give him credence because of that,
He could come out and say something about the hood and they would believe him.
Trying to tell everyone that we'll put it in the description, but these motherfuckers
don't. We'll put in the description below. Like, share, and subscribe.
Cool, man. Y'all ready to get started? Any final words before we get started? Or beginning words, I should say.
JT?
No, because it won't stop. It'll just leak into the podcast.
Yeah, all right, here we go. I'm going to share my screen here. You guys see my screen?
Yeah.
Yeah.
James, by the way, I brought Pendle Finance here and here. We're up a little over 50%. Pretty good. Anyway, all right. So we're looking at the central bank balance sheet. We finally made contact with the 200-day moving average. So they're just constantly offloading those junk bonds, which is good. I really want to see us. I wouldn't be surprised if we hiked up and hit this line one more time before we went down and came back up and tested this line of support before we made our way back down more. But only time will tell. We got rates pretty high here. And I don't know if they're going to pause or raise rates again, but something's eventually going to break. And they might have to lower rates a little bit or print more money. So I wouldn't be surprised.
The meeting started today, so they're definitely pausing.
They started today?
Yeah, we'll get that decision tomorrow.
Okay. Cool. Next one here. We got the M2 money supply. Looks like it's just kind of just consolidating. So only time will tell with what happens with that. Gold's still pretty much doing the same shit that it's been doing for the past
30, 40, 50, 100 years.
Yeah, pretty much. And so this is a little interesting here. So we're looking at the S&P, and we're on the monthly chart, and we can see that we kind of broke out of this channel a little bit here. So I'm going to actually go on the weekly. So we broke out of this channel, and it looks like we're coming back up to test our trend line, our 62 EMA, which is rolling Fibonacci, as well as our 200-day as resistance. If I was a short in TradFi, this would be a good opportunity for a short. The next relevant level of support that we have is around this level. So we could be looking at a 12 to 13% drop potentially. Nothing's for sure, but you always want to think in probabilities, and that's a highly probable outcome given these confirmations that I'm seeing here. Same thing here on the NASDAQ. So if I actually zoom out to the monthly here, give me 1 second. We've been in this trend since January 2019. The market has been respecting this trend. This is the pandemic. Everything pretty much dropped in, and then we dropped below here as well. So, we'll see if the market can hold this level, but we're getting to the end of this wedge. So the price is going to have to make a decision. It's either going to go up or down. We got elections next month. When you guys are watching it, it'll technically be this month. Do you guys know the actual date of the election?
I should.
I'm about to say, Isaac, I'm surprised you didn't just fire that thing off. You living down there. It's
I should not.
Yeah.
It's November 5th, obviously.
Oh, I was going to say, isn't it around November 4th or 5th? Man, it's crazy. It's a couple days.
Yeah.
I want to ask you some things about that here in a bit.
Oh, absolutely. I got all the election knowledge.
Nice. And then we're looking
at the date.
Right? And the winner. But no one has that. Oh, maybe some people do. That's a whole nother thing. And then we're looking here at the NASDAQ. Price is still within this channel. So, we'll kind of just see what happens. And then if we look at Apple, it looks like it's turned the previous all-time highs into support. We go on the weekly here, we'll see that it's just been touching. And now we had our 62 and our 200-day kind of creep back up as well. So I wouldn't be surprised if we saw another rally to this $196 level, or even all-time highs. Apple does have a buck ton of cash.
Their market cap is higher than the entire 2000.
Yeah. So now let's look at some crypto stuff, guys. So on the episode we missed last week, we would have had a live pump on the show, which would have been pretty dope.
It literally pumped 5% during when the show was supposed to take place. I was kicking myself. I was like, are you kidding me?
It's all good, man. It's all good. At least our Bitcoin bag is up a little bit.
That's a good point.
Yeah. So yeah, we had this little pump here, and a lot of people think it's because of it is pricing in the ETF approval. The SEC has been losing every battle with crypto lately, and a lot of people think that once the BlackRock ETF gets approved, it's going to be the other ones, because they don't want people to think that they're just in bed with BlackRock and they're just letting them do it because they're getting bought out. So I wouldn't be surprised if multiple ones got approved at the same time. But just looking at this from a technical analysis standpoint, Bitcoin broke the $30,000 level. And like I was showing you on all other charts, I always look for confirmation. So what I would want to see for us to, confirm a bull market, or not even confirm a bull market, confirm continued bullish momentum, is I want to see it come back down to this $30,000 level and retest it, and then print another nice green candle like this, because right now we're facing resistance at this $34,000-$35,000 level. As you can see, it's been like support and resistance a couple times. It was resistance here, it was support and resistance here. It kind of just fell through right here. But we're on the weekly, so if we were to go on the daily, we can actually see it a lot more. How many times it's just been chilling around this level. A lot of liquidity there. So we did blast to the $30,000 level, which, like I said, is a pretty important key level. So we'll kind of see what happens. We've had some other altcoins move a little bit, but not as much as Bitcoin, just because I think it's this whole ETF situation. But like one thing to keep in mind, guys, like when gold got its ETF approval, I should have marked this on the chart. I think it was in like 2004, if I can remember correctly, guys. Correct me if I'm wrong. But yeah, the ETF got approved, and then we saw this crazy rally. But we are pretty much at levels that we were at in 2012. And that's because once the ETF happens and you can just trade paper gold, it's easier to manipulate. Investors period, prefer a lot of times to hold the paper because it's more convenient. It's kind of the same thing with Bitcoin, even though it's easier to secure. But just like people don't want to lose their gold or have their house getting broken into, people don't want to risk losing a piece of paper or wherever they store their keys. So I wouldn't be surprised if like this ETF got approved, we see Bitcoin go on a massive rally, and then we see it kind of maybe not be able to get past a certain point after it gets to a certain point. But obviously only time will tell. And then another important chart that we're looking at here that just broke like a key level, or a key trend, I should say. All right, so this is ETH BTC, and whichever one is first is the one that's outperforming the other one. So as you can see here, we have had ETH has been like on an uptrend against Bitcoin, and it was consolidating, but it was on this trend since January of 2020, and we finally just broke out of it this past week. And it's obviously because of this whole ETF thing. And as you can see, like I was saying, the market likes to go between ceilings and floors. since May 2021, every time it got here, it's a good time to sell your Bitcoin and buy Ethereum, because every time it got down to this level, we saw it bounce back up. And if we want to track, it would normally outperform Bitcoin between 50 and 60%. However, we just broke this trend, right? So if we don't hold this level, we're probably going to go back down to this next major level of support. And that would mean Bitcoin would outperform ETH by 30%. So I'm not making any more moves right now with my Bitcoin and my ETH. But if we break this level, I would probably sell some of my Ethereum for Bitcoin, just so that I don't have to suffer as many losses to my portfolio. Guys, what's your thoughts on everything?
Yeah, so generally speaking, and you can actually find studies that show how markets generally move each election cycle. You usually see markets kind of being held up during this period, mostly because the incumbent who is in power has an incentive to make sure that markets perform well when he is trying to win re-election, which he is currently. And because he, has the levers of power, there generally is a excitement in the market, even if it's not like the president doing anything particular, or his lackeys or bureaucratic affiliates doing anything. The market generally reacts positively, expecting things to be kind of propped up going into the incumbent's election season. But and that's mostly because the likelihood of somebody getting reelected, you can almost always map that with the performance of the economy. So a president has a huge incentive to make sure the economy is performing well when he is running for reelection. And that's really the only, that's like 90% of how a guy wins reelection, is just that. Is the economy doing well? Yes, I'll vote for him. No, I'm not voting for him. Yeah, so that's what I would assume everything's going to do with the markets. We're probably going to be held up until, I don't know, for a bit going in here to election season. There's going to be a lot of incentive to do that. Things can obviously change. I wouldn't say that there's it's going to maintain forever. I think we're going to hit a recession Q1, Q2 next year. Some people have even been saying that we might hit an election at the end of this year. Should be crazy. But
election.
Recession. And yeah, they're wrong. Yeah, I've been seeing those guys.
Yeah. That'd be crazy. But I've been seeing that a bit. I saw that on I was watching the news actually, and some dude who got on there was like, no, we're gonna hit a recession this year. It's gonna happen at the end of the year. I'm still saying Q1, Q2. That's what the guys at Wells Fargo are saying as well. So that's what I think is gonna happen.
You hear about Donald Trump being indicted and all that stuff. Is he like in the running?
Yeah, he's in the running. Even if he gets arrested and is thrown in prison, he can still run for president. We actually had a guy, his name was, what was his name? He was the head of the Socialist Party, and he ran in the 1914 election, and he was thrown in jail for anti-war sedition. Like, he was talking against World War One.
Was he president before that, or was that his first time running for president?
It was just, he ran and lost because he was a socialist.
Okay.
But he still ran, and he was still on the ticket in basically every state. Currently, Colorado is actually in a lawsuit to see if they can take Trump off the ballot. And if Colorado wins that lawsuit, which it's not going to, very unlikely it's going to, it might, it's unlikely. But if Colorado did win that lawsuit, then that means that Trump could be taken off the ballot in a lot of states, probably just Democratic states where he'd lose anyway. But if he was taken off the ballot in Pennsylvania, that's big because that's a swing state. I'd say it's unlikely that's going to happen. It's more likely than not that he's going to keep running. Even if he goes to jail, he's going to keep running, and he's definitely going to be the Republican primary candidate. That's almost a sure thing.
Now, would they ever put a guy who actually was the president of the United States in prison? Has that ever happened? Someone who was actually the actual president and they went to prison after their term?
It's legally dubious whether that is something that could actually occur. It's never been tried yet, but they would be impeached first. So they would have to be impeached.
No,
and then Congress would have to vote.
Now while they're sitting in the chair, I mean, even in Donald Trump's position, where he was the former president and now he's being indicted. Like with somebody in his position where, the Secret Service has to follow him around for the rest of his life because he was president, will he go to jail?
He could still go to jail. Like if Donald Trump shot somebody in broad daylight, he's not immune to laws. Like he could still go to jail if he commits a crime.
Interesting.
How likely do you think it is that Joe Biden gets reelected?
His disapproval rating is higher than his approval rating.
Yeah, but so is Trump's. I mean, and so probably still is Trump's.
I feel like this was more real though. Like people used to say they didn't like DT because of the social pressures. I feel like people actually don't like fucking Joe Biden.
My general thoughts on whether, Trump or Biden is going to win the election, I don't know. I think it's a toss-up. I lean towards Biden, and I think the betting markets also lean towards Biden winning. And the reason why is because there's just a lot of shit happening with Trump. He is being indicted. He might get arrested. And if he gets arrested, he's not going to be able to campaign. He's currently not allowed to campaign because they have him under a gag order. So he's not allowed to talk on politics right now in the public sphere. A gag order is so if there's an important case happening and you are the subject of that case, in order to maintain as much impartiality for the jury, who are also members of the public, you are not allowed to speak on certain issues towards the public. Sometimes you can't speak on like anything. And Trump was issued a gag order. And also just the fact that he has to go into court so often, these things are all preventing him from being able to campaign in a normal manner. And because of that, he's not going to be out in the public as much. He's not going to be speaking as much. He's not going to be visiting supporters as much and holding rallies. That all hurts your chances. It's a really weird situation, though, with Trump, because the fact that he is being indicted also might like boost his popularity as well. And I think it has in some ways, because it kind of makes him look like edgy. What'd you say?
Ted Bundy.
Well, people also look at it. A lot of people look at it like the government's trying to take him down in certain ways.
Which it's hard to deny. When the man's literally being indicted by the government, it's like if you're going to make the case that the government's going after him, I mean, like this is like your dream scenario, right? To make that case, because like they kind of are. So
they super.
Yeah, perfect timing.
The polls do show that Trump is slightly ahead of Biden, but this early in the game, polls don't mean much. They'll change drastically by the time we make it to election night.
It's gonna be an interesting time. Like, you guys think they'll be able to? You guys remember all the so-called manipulation last time, and like how they were shredding ballots, and they showed evidence or footage of people working the ballots, like filling out ballots for Joe Biden, all that stuff. Like, what do you guys think the chances are of stuff like that happening again?
Doesn't that stuff like gerrymandering happens every election, Isaac?
Well, no. So this isn't. So gerrymandering, yes, it does happen every election. But gerrymandering. So gerrymandering is when you establish a district, like a congressional district, but it doesn't have to be. It can be any district where people vote on a representative. If you construct the district in such like a weird, wonky way that you only get certain demographics in that district, you can make it so that your party has more influence over a state than they otherwise would. I'll give you an example. So like if you have like a state and this state's just a big square and you got a big blue pocket here of Democrats, a big blue pocket here of Democrats, and then like a bunch of Republicans in the middle, and you got to split this state up. Yeah, I am. And if you had to split the state up into, let's say, like 3 different areas, and they will all then vote on representatives that have either a blue or a red party affiliation. What you could do is you take those 2 blue pockets and you're saying, okay, this is an area, and then the middle's an area. Even if the state is 2/3 Republican, other than the 2 little Democratic circles, if you game the shape of the district in such a way, you could give the Democrats a slim majority in both of those districts, which would actually give you 2 representatives instead of the 1 or 0 that you might have if you built the district a different way. That's gerrymandering.
Okay. So you guys think that stuff's going to happen again?
Well, that happens all the time. What you were referring to was election, which is which I don't know if we can actually speak on, because I believe it's a bannable thing on YouTube to speak on.
Oh, okay. Well, let's think of a code name. I'll edit it out. What should we call it? Truffling. Let's just call it truffling. Do we think truffling can happen this go around? Because it seems like they're doing everything they can to not let who get in.
It actually, to me, seems that way. Like, legit. Not gonna lie. Like, it seems like we really, as a country, do not want, or maybe it's just our government, we do not want this man to be president. Like, it is against our long-term goals as a country. And so we're doing everything in our power to prevent that from happening. Now, do I care or not? That's neither here nor there. But I'm just looking at it for what it is, and it does seem that way. It does. And, with, I don't want to stick to politics the whole time, but, we talked about, making sure markets are propped up going into elections. Do you guys see the latest GDP print? The actual GDP? Before revisions, at least?
Talk to us, man.
4.9%. So the Atlanta Fed was estimating 5.4%. We increased 4.9%, but I think that's base effects. But yeah, so, very strong economy. Janet Yellen comes out and says the dumbest shit in the world. She's been getting ripped apart. She always says dumb things. It's very confusing. Like, how is she so reputable? She's intelligent. She has a great history in terms of just the positions she's held, even her education. I mean, everything is like rock solid about her. And then she gets on TV and says the long end of the curve, the reason yields were rising is due to a strong economy. I'm like, that actually doesn't, it would make sense in a different environment. In this environment, now, the bond market, I feel like it's always subjective. Even when you get like the bond kings on, and because I like to hear their perspective because the bond market is so confusing. It seems subjective. It's like no one really knows. They're literally taking their best guess, right? And to me, it seems like the longer end of the curve is rising because we have entrenched inflation expectations long term. It even shows the Fed doesn't expect to get inflation down to 2% until like 2025. And so the fact that she came out and said that, I mean, it seems like she also wants maybe Mr. Biden to stay in office. Because everything that happened this year, they tried to spin it in a good way, whether it's the house. Bro, they'll try to tell you the housing market is in good shape right now. But affordability is at its lowest point in absolute history. And so, it's 100%. They're trying to. It's like something. It's just weird. I don't want to stick to politics because now my mind's getting all conspiratorial. So help me switch, Isaac.
Yeah. No, let's definitely. So I will just say, let's definitely steer clear of any. And this is purely just to keep us something on topic, and in a realm where anyone who watches the video is like can agree, because we're talking about like basically known facts.
Yeah.
Yeah, but I agree. I think that it's the government's job in some ways to do things that are going to help keeping your guys in office. And technically, like people like Janet Yellen, the Fed, these are nonpartisan organizations. But these people know which administrations will put them in charge and which administrations would like to see them gone. And they would like to stay in charge because, they're self-interested actors. Everybody's a self-interested actor. So there is a theoretical perverse incentive for our financial institutions to do things that are detrimental to the economy in the long term, but will help prop up the economy in the short term if these people believe it will keep their administration around longer and help them win an election. This is called a time horizon. And there's actually books written on this. I think who wrote a book on this? This guy named Hans Hermann Hoppe. It's kind of a controversial figure, but he talks about the time horizon that comes from elections. and that elections often breed short-term wins, like a boom, like a short-term bull market, but will breed long-term structural dysfunction. And I think that we could see that occur. I think we're seeing a lot of structural dysfunction kind of become embedded in our system in order to prop up the economy just to win elections.
Well, I'm excited for our talk next week, man, for whatever happens. Yeah, I haven't been really like keeping up with stuff. It doesn't even feel like an election is like happening.
It doesn't. No,
it doesn't at all.
I've noticed that as well.
I think the markets, man, we might have a recession like you said, probably Q1 of 20. It doesn't seem like we can sustain this further past the far past the election. So if you guys been following the Treasury, once again, going back to them, so they're doing an issuance. So when the Treasury does an issuance, obviously they're effectively borrowing money. They're effectively like taking on debt. And so they're refilling their coffers. They're literally like refunding the Treasury account, literally. And so between now, which is October, and December, they're going to borrow $776 billion. In between January and March, they plan to borrow $816 billion. But I think they just revised that down this morning. And I don't think demand. And so just the denominations that they're going to issue is 3-year notes, 10-year notes, and 30-year bonds. Now, I'm genuinely curious to see this demand. And this is taking place on November 7th, 8th, and 9th. So November 8th and 9th, I'm genuinely curious. That's about $60 billion in long-term treasuries in terms of the 10-year and the 30-year that they're going to basically effectively auction off. Now, I'm curious to see the demand of that, because if demand isn't high and we get those primary dealers and investment banks buying up most of the issuance, long-term yields are going to go higher, which means yields across the board are probably going to go higher because people are expecting more inflation. And if yields sustain above 5.25, that's going to be detrimental to equity markets. And so usually when we look at a recession, we watch equity markets fall off the map. That's usually like the first barometer of the recession that we see in terms of like our visual representation of it. And I can see downside coming in, first quarter, second quarter for sure, because demand for bonds is just not going to be that high. It's just not, especially on the long end when you can lock your money up for a month and make 5.5%. The risk premium or term premium on those bonds, it just doesn't make sense. You effectively make less money to take on more risk. And it doesn't make sense to take on a ton of duration risk right now if you're an investor, if you anticipate more inflation that's going to be entrenched down the line. And so I think there's going to be a lot of hesitation to pick up those bonds, which is just going to put more downward pressure on us. So yeah, I can't see this stock market strength carrying out too much longer after elections. And also, due to all the job data revisions, I feel like we're going to get some type of like bombshell in terms of the consumer, which is 70% of our economy, after elections as well. It's like something is just like, it's not, I don't know. I just feel like something's been kept from us in a way. I really do. Like, I feel like we're going to get a bombshell in the labor market at the beginning of the year. I really do. So yeah, man, I would agree with your sentiment that, we could see a recession in Q1, Q2. And this war in the Middle East is actually escalating, I would say. I haven't been keeping up with it really, but I noticed it's escalated. There was like a missile that was launched like a couple days ago.
Yeah, there's been a lot of missiles.
No, but we launched
real escalation.
We launched one. We launched an airstrike in Syria. This was on the 27th. So Jamie Dimon, now, say what you want to say about Jamie Dimon, he still runs like, he's still like the godfather of the banking system. He's selling 1 million shares at the beginning of 2024, worth $140 million. Well, this is the first time selling stock since he's been the CEO, for the record. But you have to think, you just asked for what? Why?
No, of what?
Selling JP Morgan stock? Yeah. So why is that, bro? It's probably because he expects some downside in his stock price. And so maybe he's like, let me go ahead and get ready to take some profit now. It's a good time. I've never done it before. I see some downside coming. So let me go ahead and sell fucking 140 million worth of stock. And so I also have to look at that and say, damn, what is Jamie Dimon really seeing, man? Because he's been saying some outrageous things all year, it seems. And now he's taking an outrageous action to back up all his outrageous statements. And to me, that he's definitely sees more downside coming. So I would just once again have to agree with you, Isaac, that we should see some type of downside in equities in the first half of the year. Not in housing, that's completely separate, but in equities for sure, which could eventually leak to housing in a way.
Believe what they do, not what they say.
No, I mean, I agree. I do think that an important note on maybe some of these, we're talking about like structural issues that are resulting from a short-term desire from the government to prop up the economy. I think definitely a structural issue that is not being addressed at all is debt creation. And the fact that interest on our debts is becoming, oh yeah, well, and it's huge. The interest on our debts is becoming, I think it's reaching some of the highest levels, even for consumers. Like interest paid by Americans on their personal debt is now equal to 2.7% of their disposable income.
Yeah.
And it's expected to go up to like 4 or 5% based on current trends. And that's pretty messed up. And the thing that's messed up about that as well is that this is coming after a long period of quote unquote free money when interest rates were kept at zero or near zero. And I think it's pretty clear that the free money days are over. A lot of people are thinking, oh, when are interest rates going to be brought back down?
Yeah, they think we're going
when is this going to occur?
Yeah.
They think we're going back, which is odd because really we're actually just now approaching closer to the mean of where interest rates are usually throughout history. And interest rates, if you look historically, always come back to the mean. They'll go high, they'll go low. And we've been at historical lows for a long time.
And they're like 40-year cycles,
people think
bro.
We're going to go down. Yep. Yeah, they are. So I don't know. Like, to me, it's kind of ridiculous. And if we, as Americans, we need to get used to the idea of having to pay more for our interest. Like, it's going to be more. And the thing that scares me, though, is the fact that so many people now have outstanding debt. And we're such a debtor economy that it's going to be very hard for people to, and I think for the economy to get back into a state of like really stable growth again, because we're going to need to unwind a lot of this debt. This is what tells me we need to get into a recession. It's going to happen because we can't keep moving and growing economically with so much unwound debt and with such high interest rates on that debt. So I don't know. I think it's going to get worse. I think a lot of this stuff is going to need to be unwound, and that means a slower, economy. That's what it means. I don't think you can have a soft landing given this state of the economy. And these are structural issues, unfortunately. This is a structural issue. This is paying for the free money decade that we just had. And just how it is. It is what it is.
Yep. As of September 30th, we are running a deficit of 1.7 trillion. Yep. Our interest expense, I remember going over this before, it's probably at the end of the year, which is coming up soon. We're going to be at like 2.6% of GDP just on interest expense. And I just saw this morning that the Federal Reserve came out with new GDP projections for 2024. They're expecting, the number I saw was 0.83%. So if we're spending 2.6% and we grow at 0.83%, is that a contraction? I would say it's a contraction. Not a nominal contraction, but a real contraction. And so, yeah, that's technically a recession if we experience that, for two. I don't even know if we use that as a real definition anymore for a recession, but
we don't.
Yeah.
We don't. Not the recession's whenever the Fed says it's a recession.
Yeah, basically, yeah. So we should have some recessionary activity for sure. It's funny. CNBC, I watch CNBC a lot. They actually talked about fiscal dominance for the first time. This was like maybe 4 days ago. And I thought it was so interesting because I'm like, man, this has been a structural problem. I would say for real, since the pandemic is when it really started becoming a real big problem for our short-term monetary policy, really. And this is their first time bringing it up. And so we've been having those muted effects on monetary policy where because fiscal policy has outweighed it so much in terms of whereas just all the money we printed, just to keep it simple. And so I forgot the point I was gonna make. I gotta be real. It just left my head as I was talking. I hate when that happens.
So, we got this BlackRock ETF, and a lot of the deadlines are coming up. A lot of people think that it's going to get approved Q1 next year, which is coinciding with the recession prediction. Let's say it gets approved. We know BlackRock is going to have to buy a lot of Bitcoin just to be able to fill orders, like we talked about. And, retail investors aren't that savvy. Do you guys think this can cause like a bull market in Bitcoin and crypto? How it's coinciding with the halving as well? I know we talked about the halving isn't going to hold as much weight because it's less and less Bitcoin, or the inflation's like becoming less and less. What's your guys' thoughts on that? BlackRock, the Bitcoin they're probably going to have to buy. Let's say it pushes Bitcoin up to, I don't know, 40, 50K just off of them being able to fill orders. Do you guys think institutions are going to set in given that there isn't, the stock market's going down, everything else is going down?
Hey,
And the crypto, this little mini asset class, like what's your guys' thoughts on that?
going off of that 11% pump in one day based on a rumor that it was listed on the
There was a
the
there was an intern who posted like a tweet saying that the ETF had got approved, and that's what led to the first pump. But then people are like, "Oh shit, maybe it will." Like it was literally just a mistake.
Bro, I love crypto.
Yeah, so bro, based on that, it could be damn near a buy the rumor, sell the news type event, bro. When the ETF is actually approved, yeah, you're probably gonna see a pump initially, but that sell off is gonna be something crazy. And then obviously it is stabilized. And I think the growth trajectory after approval will be more steady for Bitcoin. But I think because of that pump, it definitely seemed like a buy the rumor, sell the news. So kind of like Coinbase, how all like, bro, I even thought Coinbase was gonna shoot. I lost like a bunch of cash on Coinbase because I bought the damn IPO. Not the IPO, but like I bought on the first day they became public. And
Yeah.
yeah, I had to cash that out, man, because it was I realized it too late. Like, damn, this is definitely a sell the news type deal here.
Here's the thing though, like let's say it's not just BlackRock that gets approved, it's multiple ETFs that gets approved, and they all have to buy a fuck ton of Bitcoin. They're probably gonna buy
From an OTC.
this thing.
They're probably gonna buy OTC too, bro, so to not affect the price much. I mean, there's a lot of things that could keep prices here very stabilized, even upon approval, actually. And this is coming from the guy who's been saying that is going to be the catalyst. It's like, man, after what just happened this past week, it's like it's going to be one of the catalysts for sure.
Yeah, no, I agree with JT on this. I mean, honestly, the fact that it pumped on the rumor, which is such a ridiculous like story, because it's just crypto how it works, it made me less confident that it was actually going to go up when if we get the actual announcement, because it's pricing it in on a rumor, and then when they announce it, I could totally see a situation where it just dumps and everyone's like, "What?" And I'm like, haven't we been through this before? Like, how many times does this have to happen to us?
Yeah.
So I don't know. Like, I actually sold like a bunch of Bitcoin when it like when it like briefly went up to like
35,
34. No, it wasn't. I always do it a little bit before, but when it got like close to it, because I'm never sure if it's gonna actually hit it. And I sold a bunch, not like a bunch, but I sold a bit. And I'm willing to jump back in if it jumps back down to something like 30. Like I could throw in a little bit more again. But I'm fully expecting like a drawback, old Bart Simpson, where it kind of goes up, bloop, 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 and then kind of shoots down again. I could be wrong. I didn't sell enough for it to be like a huge I fucked up. But I kind of expect it to be a bit of a sell the news event. That's my thoughts.
Bart Simpson. I just got that.
Yeah, that's what we always called it.
The hair, huh?
When we did trading. Yeah, the hair. Because you get a little initial raise, shoots around, drops down, and you get a Bart Simpson.
So another point to add to is that if we do, let's say if we're right here and we have a recession earlier in the year, well, that's going to have a big effect on liquidity. And we talked about how liquidity affects risk assets. So also that's a headwind, even in the face of the ETF approval. And also the Federal Reserve might it's just been a discussion. And I got to do more research on this, but they might stop paying interest on excess reserves to the commercial banks that keep their reserves at the Fed, which means there's less liquidity to loan out or for investing or whatever it may be. And obviously, banks are the source of liquidity in our world, except for the pandemic. The Fed was, the central bank was. Normally, the banks are our source of liquidity. And so if they don't have liquidity, obviously consumers don't have liquidity. And if consumers don't have liquidity, most people will rather buy a stock than a Bitcoin, even still today. And so obviously stocks are going to be going to the downside. And so I would expect the same thing in crypto. So even with the spot ETF being a catalyst, we still got to look at recessionary activity because it's not a recession hedge. Wasn't it supposed to be a recession hedge? Like when things are going bad in the U.S. economy, Bitcoin's supposed to shoot up. Well, it's not doing that. So, and I don't think it's going to. And like Isaac, I could be wrong, of course. You know, it's finance. We could be wrong about everything we just said. But you know, I just don't. I don't see it. And so I think
I agree. It's a risk on asset.
Yeah, because bro, liquidity is going to be tight for like the next year and a half. You know, even on the real estate side, you know, if guys, so I've had like probably 2 guys come to me and try to help me get funding in the past month. And so one thing that was a big part of the discussion is, look, a couple years ago, you were able to go in there and have shit in some cases, you know, 50, 65% of the funds and get the rest funded. Now it's like, bro, it's strict. You have to have 75, 80% in order to get funding for a project. You have to, because they're only lending to quality borrowers and they have less money to lend overall. And so they're being very picky who they're lending to and on these projects. And so that's just an example right there. Now, that's not a risk on asset, but liquidity affects real estate a lot. I'm not going to say like Bitcoin, but a fuck ton, obviously. And so you can imagine a market where, okay, if we don't have room to buy, say if all the demand fell off the earth because all the money dried up, well, what's going to happen to home prices? Well, they fall because there is no demand, although there is supply. And so they fall. And so, you know, you can look at it simple like that and just say, okay, boom. And so, you know, using liquidity, once again, it's like, damn, even in the face of ETF approvals and price appreciation in real estate, liquidity always makes, it's like blood. It's literally blood. I think you said it's the lifeblood of our economy on like 2 episodes ago, Vince. And it is blood. And you look at it like eventually, if liquidity is drying up, that does hurt pretty much every asset market, every single one. Even one like real estate, who's constrained by supply problems right now, it will still be hit hard if we have some type of real liquidity crunch, which seems like we're going that way. Because remember, the Treasury is also refunding the Treasury account too. So you have liquidity being pulled out in so many different directions. You know, I'll just be interested to see in a few months how things are looking.
Yeah, another thing, that's good stuff, by the way. Another thing to keep in mind is that the powers that be, whatever you want to call it, call it conspiratorial, whatever. I think that we're going to get an ETF that's going to get approved, and I think they're going to go after like Binance, maybe Tether as well. Probably one at a time. They probably won't do both. You know, Binance been ducking and dodging regulators for years now. I think they're going to want to do that because they're going to want to be the main source that like makes money off of trading and not Binance. So I wouldn't be surprised if we saw an ETF get approved, then we see Binance go down afterwards, because if it happens before, I think it can just like, I'm not going to say kill crypto because it's like the genie's out the bottle at this point, but it can be really, really bad. And I feel like that can provide, I wouldn't even
say that. Oh, my bad. I keep cutting you off, man.
Oh, that's pretty much it. I would say it would provide like a cushion.
Yeah, I wouldn't even say it's conspiratorial. Binance, they got that shit coming.
It's crazy because they built a great product. Like, you know, they're just like,
they just built it in the wrong way, and I think that's part of the reason made an effort to take down SBF is to actually take attention off him, but in the long term is going to put more attention on him. And he shut down Binance. Was it Binance US? He shut down. He shut down something to try to act like he was in compliance or whatever. And yeah, did they get rid of the BNB? Not the BNB coin. The Binance coin.
Stablecoin. Yes.
They got rid of that.
Yes. BUSD. Yes.
Okay. Yeah, and they got rid of that as well.
Brutal.
So I think it's coming for them, man, for sure. I think it's coming. Plus, we got to make room for Coinbase, bro. Come on, that's the only one that's trying to be really compliant with the government.
Yeah. It's got that BlackRock backing.
Exactly.
That's how you know it's going to succeed.
Exactly, bro. I mean, come on, they're doing their custody, if I remember correctly. So it's like we got to make room for Coinbase. We can't have a fucking Binance out here.
Yeah. Also, I hate to be the cutoff here, but I will have to leave now.
No, you're good. We're coming up on an hour here. I just want to say one more thing on Binance, and we can just go ahead and wrap it up. So if we look here, you see Binance Coin, BNB. It's like their ecosystem token or governance token for the exchange or whatever. It is the fourth largest crypto at a $34.8 billion market cap. If we look at the chart for BNB,
what about
it? Okay, we can see that. We can see that we were on this trend line we can see that it was on this trend line since May of 2022, and it just broke below and it's coming up to retest our 200-day. Like, there isn't any more relevant support until a $5.6 billion market cap. Now, I don't think it's going to go that low unless they obviously get shut down and all that, but I'm expecting a lot of downside for BNB coin. This chart does not look good.
So wait, how is this possible if they got rid of it?
This is BNB. They got rid of the Binance stablecoin. This is BNB token.
I thought they got rid of BNB. Okay, I thought they got rid of BNB.
No. They didn't get rid of BNB. They got rid of the BUSD.
Okay.
They get rid of BNB, they're done. It's over,
It's funny because they probably do the same exact thing as FTX, bro. I would not be surprised, bro. They do the same thing. Isaac, I know you got to go, so I won't spark up a new conversation.
Yeah, I got to go.
Yeah.
Yeah. JT, man, you can stay and talk for a little bit unless you're feeling super bad. You want to go too?
No, we can stay for a couple more minutes.
All right.
So I'll just sign off.
Always good.
I'll see you guys later.
Do you think that Binance is carrying out the same strategies or tactics as FTX?
So, I mean, we could say yes or no, but the truth is, whenever people went to go and withdraw their money, they were always able to fill the orders.
Yeah, that's true, but that doesn't mean they're not doing it. It's like, oh man, has there ever been a run on Airbnb on Binance?
Yeah, plenty of times, but they always were able to fill the orders. There were times where they stopped withdrawals because of some internal mechanisms, like maybe smart contracts was flawed or this or that, but it was never
But they actually made a lot of money. I remember CZ was talking, this was years ago, and they were making upwards of $1 billion a year from Binance.
Bro, he's one of the richest people in crypto.
Yeah, so they probably just have a ton of liquidity, but probably still carrying out stupid tactics that are risky. But they have so much liquidity where it's like, oh, we can just pull from here. We just pull from here.
They have the most liquidity in crypto, and also their BNB token, since it has a $34 billion market cap, they have a large reserve of that they claim is it's not decentralized. They have all the nodes are operated by Binance. So they can do whatever they want with that token, and they can use it to buy whatever they want if people want to withdraw. We got a $34 billion market cap of liquidity. You know what I mean?
That's true. Yeah. That's crazy, man. That's such a crazy business, honestly. He's very rich. That's crazy, man. But yeah,
I give props to him as an entrepreneur too, bro. He's doing some hard shit.
No, 100%. Even his little war with SBF, man, that was interesting. That was movie-like. You feel me? So that was good.
It's gonna be a movie on that for sure. In 10 years,
100%, 100%. I'm glad I never used FTX. I remember seeing it and thinking not fuck this, but I just wasn't happy to see it.
Something about it. I never used it. I set up an account. I got approved, all that stuff, but I never put a single penny on it.
I think it seemed too corporate at that time. At that time, I was more of a degen, and it seemed too institutional. And so it was like, I'd rather use, just the smaller platforms.
No, it seemed good. It seemed like a great product.
It did, just really institutional.
Yeah, it was just something about SBF that didn't sit right with me, man.
I actually liked him. He fooled me. I'm not gonna lie. I'm glad I didn't give him millions of dollars. Shit would have pissed me off.
I didn't like him or dislike him, but it was something I just couldn't put my finger on.
Yeah.
And I'm not saying I knew he was a scam artist. I'm surprised by that.
You know
But
what's funny,
something
bro?
where I'm
Like, he doesn't know how to code, or here's like stories I heard. Like, he's not like a great coder. He's not a great businessman. It's actually not that smart. But he is, because he pretended to be a genius and we believed him. Like, ain't that crazy? Like, to pretend to be a genius and the world believes you. That's like intelligent within itself. It's weird.
like he said, cogito ergo sum.
Man, I forgot about that, man. What does that mean again?
Think, therefore I am. Something like that.
Oh yeah, cogito ergo. Yeah, man, I haven't said that in years. That's funny as fuck. Cogito ergo sum. I think, therefore I am. I'm ready to wrap it up, bro. Unless you got another thing you wanted to go over.
Yeah, so I wanted to go over my bond strategy. Sorry, no.
Nah, but I've actually been thinking about that a lot, bro. Not gonna lie. Like, sometimes I'm like, damn. Like, and I don't wish often, like, to be like, man, I wish this, because I don't like doing that. But like, right now, I was like, man, I wish I had like $10 million, bro. I would literally just make 5.5% a month, bro. I would be on treasurydirect.com, and I would be buying short-term T-bills and just making money. Or if I like was friends with one of these rappers, I'm like, bro, just give me 30 million, give me 20, give me 15 million, 10 million, and I'll make you 5% a month. Like, at least for the next 3-4 months. I'm like, bro, well, in this case, I could have did it for like 6 months. And I think about that pretty often, and it's like, man, that's how you build a reputation when it comes to investing people cash. You asked us earlier if we're making any changes. Actually, the biggest change I'm making is just making more cash, and I'm going to be more cash heavy, because I think on the real estate side, on the single family side, it's hard for me to see prices coming back down. It really is, until we get supply on the housing. But at the same time, there's always different strategies to make money in the real estate game, keep your liquidity going. And there's also ways to inoculate yourself from downturns, as long as you have a good tenant with a good job that isn't affected so much, and they can still pay their rents. Eventually, things will get back to where they are. And so I'm going to be buying a lot more real estate. And yeah, man, I'm just going to stay on the sidelines, because I got my eye on a few spots in equities as well, and just keep adding to the crypto portfolio. But other than that, the biggest change is keeping more cash on hand, because I do believe that recession is coming, and when it comes, oof, I'm buying, because I gotta think that this downturn is going to be so bad. It has to be, right? That's what a lot of people would say. It has to be, but like, you never know. We could have another V-shaped fucking recovery. So we'll see. But I'm gonna be prepared either way, though. Whether it's V-shaped, if it's V-shaped, great. I mean, I make money quick. If not, it is what it is, and we'll keep buying over the long term. And over the next 5 years, as things start to normalize, we'll do really well. And I remember we used to always talk about, these are the times where people are made millionaires and blah blah blah. We're still in that time. It's like, we've been saying that for like 3-4 years, but that time hasn't ended, because nothing's happened yet. We've just been anticipating things to happen, but nothing's happened. And so now that things are about to happen in the next 12, 24 months, guys, be ready. Have money, have cash to invest. Do your research. And man, we're going to be fine, man.
Yeah, I agree. Yeah, for me, I'm just taking a little profits on Pendle Finance. We'll definitely be buying back in if it goes back down, which I think it'll drop with everything else. I might enter into a Bitcoin short. I'm probably gonna take some profits on ETH and just get my cash position a little fat here again, and just wait for some opportunities to present themselves.
If you take that Bitcoin short, let me know when you're about to do it, because it's like with something like Bitcoin, even though we said what we said before, it's like still an ETF approval could shoot it through the roof. But I'm just going based on, I guess this is a form of extrapolation because of things that happened in the past. It just really seems like a buy the rumor, sell the news, and then liquidity on the flip side. It seems like a good short just because I'm saying that, but like shit, you never know.
That's why I said I might, because it's like last thing I want to do is get caught swimming naked.
Yeah, that'd be scary, man. I would hate if I knew you was in a short and I seen something shoot up. That should make my heart drop.
Yeah. Like, no, I'm not going to, unless I see like the sell-offs like start. I'm not going to try to predict the short and like, oh, maybe it'll go down. Like I'm going to wait until it starts going down and then do it. So we'll see what's up.
For sure. Well, yeah, guys.
Well, shit, man.
Hey, guys, and when you're watching this, man, if there's any like topic that you want to hear about, we probably talk about it. We just probably don't get to it on the podcast because it's only an hour at the end of the day. We can talk about this stuff for hours. So if there's something you particularly want to learn, feel free to leave it in the comments, and we can at least put that into consideration for the next episode. And yeah, Vince, I'll let you take us out here.
So if you're still watching right now, we appreciate you. Definitely like, comment, subscribe to Know It Owls, as well as our individual channels, Crypto Noah and J Mansion, where we talk about DeFi, the Fed, economics, day in the lives, all things finance, all things crypto. And that's pretty much it. We'll see you guys on the next episode where the elections will have a new president, or maybe the same one. And
hopefully not the same one. God damn it.
Hopefully not. Hopefully fucking not. Hopefully not. So yeah, only time will tell. We'll see. And I'll leave y'all with that one.
You have seen another episode of KIO Macro.